In this presentation, we're going to take a look at the invoice in more detail. So we're on the customer cycle, the accounts receivable cycle, or otherwise known as the sales cycle, concentrating on the form of the invoice. We want to consider the data input to the invoice. We want to consider the types of things that need to be put in place in order to make the data input for the invoice easy. And what is the effect of the invoice on the financial statement, that being the balance sheet and income statement. Here we are in Xero in our the demo file dashboard. We're going to be doing our similar kind of process, opening up our major statements, that being the balance sheet and the income statement. I'm going to go to the accounting drop down. We're going to go down to the balance sheet first. Let's open up that balance sheet. As it opens, when it opens, I'm going to go ahead and right click on the tab up top and pull that to the right by right clicking and going to duplicate. So now the balance sheet's going to be in the right tab. I'm going to go back to the left tab. I'm going to do the same thing for the income statement by going to the accounting dropdown. We want to go to the income statement now. And as that opens, or when that opens, I'm going to right click on the tab up top. We're going to duplicate that tab as well. So now we have the balance sheet, we have the income statement, and we have the data input that we're going to enter on the left tab. I'm going to jump over to the QuickBooks desktop just to see the flowchart. So we're in Xero or Xero, but now I just want to look at the flowchart. Now the flowchart, customer cycle, we're considering the invoice. When would an invoice be created? When we work for a company, typically where we do the work before we get paid, like a law firm, like an accounting firm, like a landscaping or something, anything where we basically do the work, we did the job, and now we want to send out the invoice. So we want to send out the invoice and we expect to get paid at some future point after we do the invoice. Oftentimes companies or businesses where they have to count hours, perhaps, if I have to count hours, such as for our guitar shop, the hours that somebody did guitar lessons or something like that, so I can do the billing, or at a law firm, the hours that people worked so that I can do the billing at the end of the month or the end of every week or 2 weeks to figure out the billable rate and how many hours were billed and then bill that out. Those are types of situations where we often create an invoice which will increase the receivable, people owing us money, and increase sales at that point in time, and then we're going to receive a payment at some point in the future. So invoice is kind of like your bill that you're sending out, of course, to someone else. Remember that when we think about the accounting software, both QuickBooks and Xero, a bill and an invoice are just two terms for like the opposite side of the transaction. So we, in our software, we say, okay, someone gave us an invoice. Well, to us, it might say invoice on it, but to us, it's a bill. We're going to enter it as a bill. So bill to us means that it's something that we owe someone else, someone else's invoice. And an invoice to us means that we're going to be invoicing or billing someone else, right? When they get our invoice, they're going to see it as a bill on their side. Okay, so we're going to go back over and we're back in the first tab here. And how would we create an invoice? There's a couple ways to get there. I think one of the easiest ways is to go to this plus button right here, because this gives you basically all the major forms that you'll be using. So this will probably be kind of like my default section to be opening these items up. I'm going to be going into an invoice then. And you'll note the screen. Sometimes it's useful to just tab through the screen. So we got who's it going to be going to? That's going to be the customer. We've got the date. Now the date will typically be pulling up the current date that we have. So you want to just be aware of the date ranges. The due date, the invoice number will often populate automatically. The software will continue with the number, any reference, and the bind. And then we have the branding where we can put, different kinds of formats of our invoice. So we're on the standard invoice here, standard invoice. And then we have the items down below. This is where we can choose what we're selling. This is one of the key components we want to get some understanding of: the description, the quantity, the unit price, and then the account that's affected, the tax rate, and then the region and the amount. Okay, so key components, we're going to have to say, let's make one up here. Let's make an invoice and make it for a customer. Note that although there's no drop down over here, when you start to populate into this to field, it's going to pull up the different customers. So if I start to type it'll pull up our list of customers, or in this case, or contacts. Now, if I want to add a new contact, I could type in the whole thing here, right? I could say, Adam. And then there's nothing there, so I could say, all right, well, I want to add Adam as a new contact. So let's add Adam as a new contact, and there we go. The date, let's keep the date. Let's put the date as of 01, 02, and let's say 20, so I'll put it in 2020. And then I'll let it, and that gives the due date of February 6th. And so then I'll let that populate automatically. We could, obviously adjust that if we so choose. And that's going to be on the terms, based on the terms and when something is going to be due. So we invoiced it. When do we expect payment on it? And then we have the invoice number, which is populating automatically. That looks good. We're going to go on down to the items. I'll also note, of course, we have the currency and whether it's going to be taxable, whether it be tax exclusive or inclusive. And that's going to be with regards to sales tax or usage tax. Then we have the items. Now, these are really important things to understand with regards to the invoice. If you have everything set up correctly, you can imagine us, we're apparently in some kind of golf shop or something. So we're in like the golf shop. And if someone brings up, a package on it, we should be able to say, oh, well, I can just drop down on the item and say, that looks like the GB, the white golf balls, white 9. There's a 9-pack of the white golf balls. And that's all we have to do is select that. And it'll basically populate for us. Now, to calculate the sales tax, it needs to know the region that we have for the sales tax. So I'm going to go ahead and say that it's going to be 68 Beverly Park, and that's in Beverly Hills, California, 90210. That's a home for sale, possibly in Beverly Hills. And then I'm going to select that. And then it applies the sales tax down below. So we have the sales tax down here that's been applied to it based on the location. And that's another thing that we just got to kind of understand about the invoice. Hopefully that's automatic, right? All I want to be able to do is have somebody that's populating the invoice be able to say, oh, that's the 9-pack of white golf balls, and pick the 9-pack of white golf balls, and then say that you owe us $35.04 without needing to know anything else that's going on. What do we need to do in order to do that? Well, we have to set up these items. The item needs to be set up. I need to set up a 9-pack of golf balls. I also need to set up the sales tax information so it knows how to calculate the sales tax on the 9-pack of golf balls and populate the correct portion of it, the correct amount, so that the data input to actually create the invoice is really easy. The person that's actually creating the invoice should not have to know, hopefully, unless it's the same person, but hopefully we could set this up so someone else can just do it, just do the data input, right? The person doing the data input shouldn't have to know how to set up this inventory item or what sales tax is or anything. They just need to know what the 9 golf ball things are and when to select that to put on the invoice. And everything else should populate automatically. So that's one thing we need to do. So we'll talk about that later. How do we get that information in place? How do we put in the sales items so that this will populate? Key component to getting everything set up correctly. The other thing we want to know that, again, when you do the data input isn't really known. We don't really understand this, or most people, when you just do the data input, aren't going to understand all the accounts that are affected. So what does this mean? What's going to happen when we record this invoice? Like we said in the previous slide, we want to think about the journal entry that's going to happen when we record this, and you'll recall that should look something like this. Accounts receivable goes up, revenue goes up, or sales or income, whatever you want to call it, goes up. And then the cost of goods sold, the expense related to the inventory, if we sold inventory, in this case it looks like we did, we got the golf balls, should go up. And then the inventory should go down because we sold something out of inventory. So in other words, if we thought about this, we think that the sales should be going up. You would think the sales would go up, or let's say the accounts receivable should go up by the invoice. Invoice means AR is going up. It should go up by the full amount of the $35.04. So it should go up by the $35.04. Let's actually make this a little bit larger. Let's say we sold like 10 of these. So now it's going to go up by the 350.4 here. And then the other side, sales should go up. But sales should only go up by the amount that we get to keep, 320, not the 350.40. The difference is going to be the payable, the amount that we have to pay to the state or whoever's collecting the sales tax. And that's going to be the $30.40. That's going to go to a liability, a payable account. Not only that, but we're also going to have to say that the inventory is going to go down. The inventory of these golf balls need to go down. So that's an asset account decreasing by some amount that's not even on the invoice, but should be driven by the fact that we have the product here. So we want the invoice to drive down the inventory, even though we don't want that amount that it's going to go down by on the invoice because we only want the retail amount on here. The other side of that portion of the transaction goes to cost of goods sold, which is an expense account, which will increase the expense account. So let's go ahead and record this and see if we can see that. So we're going to say, let's approve this. So there it is. It's been approved. I'm going to go then to the balance sheet. Then I'm going to change the date because we put this in there as of 2020. So I'm going to say if I can make this as of, let's put it at the end of January 2020, that should be fine. And then I'm going to update this report. Once I'm on the reports, oftentimes I'll zoom in to the reports. I'm going to hold down Control and Shift, hold just Control, and then scroll up a little bit. I'm at 125% now. Now we should see an increase here in the receivables. Here is accounts receivable. It has a blue item on the right. That means we can kind of drill down on it. So we're going to drill down on it. We're doing kind of an audit procedure here. You know, we're going to the end product and back to the data input process. Really highly recommend doing this every time you do data input until you really understand the relationship between the financial statements and the data input process. I'm going to hold down Control and Shift and scroll down a little bit so that we can see our information. So I'm going to go down and we're looking for Adam. So here's the new item that we had for Adam. We want to pick that one up. And again, we could do the same process. And just note that Adam here says it's a receivable invoice. So it's going to give us the source type. It's going to tell us that, hey, this is an invoice. It's going to give us the description, the date, obviously, the reference, and it does show the debits and credits here. Note that's kind of a deviation from QuickBooks, which really tries to avoid any actual accounting term, the debits and credits. It tries to remove them. So I kind of like seeing the debits and credits personally. So that's it's a good thing for me. But in any case, if you don't understand the debits and credits, you also see the running balance. So you can see what the debits and credits are doing over here. You can see the increase and decrease to the account based on whether it is a debit or a credit. This being a debit, which increases the running balance. Okay, so let's open this up by selecting it, and that should take us back to that receivable that we had just approved. And there it is, the invoice that we approved. There it is at the $350.40. So that's the full amount that's in the receivable. I'm going to go back now to the data, the transaction list, the data, and just realize that terminology-wise, that this would basically be a general ledger, the GL for accounts receivable, and QuickBooks calls it like a transaction detail or something like this, and Xero's calling it accounts receivable transactions. So accounts receivable transactions, basically the general ledger. The key point here is that for this Adam, we had the full amount of the $350.40. I'm going to go back then to our forms. I'm going to go to the income statement now, which is where the other side would then be. So let's go to the income statement, and then it's going to be in sales. I'm going to go into the sales item. Let's take a look at the sales and kind of zoom into that or drill down into that, or however you would want to terminize that. I'm not sure that's a term. However you want, whatever term you would like to use for that. And then we're going to say down here, here's the item for Adam. So Adam once again, but notice now it's only at the 320. So if I select that 320, you can see it's not including the amount of sales tax. It's picking up just that 320 up top. It's not including all this sales tax stuff because that's the only amount we get to keep. Well, the difference then, which is all this stuff, is going to some kind of government that takes that money. So we're going to then go back and say, well, where is that going to be recorded? Where is that difference going to be recorded? Well, that's going to be back on the balance sheet. So I'm going to go back then to our income statement here. Let's jump back over to the balance sheet. That's going to be a liability that we owe to some type of government organization. So it's going to be down here in the liabilities. It's labeled sales tax. So if we then go into the sales tax, this account also affected by this invoice. And then we scroll down here, we're looking for that Adam. So there it is. There's the 30/40. That's basically the difference there. All right. And then let's go back. I'm going to go back up top to the balance sheet again. And we also note that the inventory should go down because we sold like 9 packs of golf balls, I believe it was. So you would think that we would have an inventory, which is going to be up top, some kind of inventory item. And we do not have an inventory item up top. And what that is an indication of is that we have something set up for these golf balls that it's not going to track inventory. So it depends what kind of industry you're in as to whether you want to track the inventory within the Xero software. So you might be in a system where if you're a service-based company, obviously you wouldn't track the inventory, but you still may use the items lists. We'll talk more about that in more detail later. Or you may have some kind of inventory, but you don't want to track it within the system. You might track it in some other way using like a periodic system, counting the inventory beginning and end of each day or each week or something like that, or track it some other way, just using spreadsheets or something like that. And also if you have more complicated inventory, you may want to look into like plugins and whatnot, which could add more detail in terms of the inventory tracking. I'm going to go back to the first tab over here and let's see what we can do about this. I'm going to go to the business dropdown and we're going to go to the products and services. So we're going to go to business and then products and services. We'll talk more about these items later. This is where we set up the inventory and service items that we saw that were populating on the invoice. I'm going to make this a little bit larger so we can see it. If we scroll down, we see the 9-pack here, the 9-pack of golf balls. So if we select the 9-pack of golf balls, we can then turn on the editing item and see how this is set up. So we have the purchases, we have the selling of this item, but it doesn't have down here, I track this item. So that means if this is off, it's not going to be tracking the receivable, or it's not going to be tracking, the inventory for it. So in this case, I'm going to see if we can turn that on. I'm going to say, I'd like to track this item. And it says inventory, it's going to set it up to this inventory account. So it's going to set up the inventory asset account. I'm going to go ahead and save that. Now it also needs a cost of goods sold account up top. So we need to pick a cost of goods sold. I'm going to select the drop down. I'm going to pick up cost of goods sold as the other side of the account when we purchase. Everything else looks good. We'll get more into more detail on these inventory items later. So that has then been completed. Now you'll note if we go back to the inventory here, we already have this turned on. They've already got this turned on for the t-shirts. So let's consider a sale of the t-shirt. So in other words, if I go down here to the t-shirt small black, that one is already set up in terms of having inventory tracking, and we actually have inventory on hand. So if I was to edit this, we would say, there it is. It's tracking the inventory, and we have some inventory on hand. So let's do another invoice. I'm going to go and say plus, and I'm going to set up another invoice. We're going to make it to Adam again. So I'm going to put Adam and pick up that customer. It should all be set up. I'm going to say that this happens on, let's make it in February this time. So I'll select the drop down. Let's make it in February 2nd. And the item is going to be that t-shirt. So you can select the drop down here. And we want the t-shirt. I'm going to make the small black t-shirt. I'm going to sell let's do 10 of them. We'll sell then, there was only 7 on hand. So let's sell 5 of them. So we'll sell 5 of those and then approve this item. So we're at the $219 after the sales tax. So I'm going to say approve. Then I'm going to go to the balance sheet. So I'm going to go back to the balance sheet. I'm going to change the date to February. So I'm going to go to the end of February, February 29th. And then now we see an inventory account there. So it's showing a negative 100. That's not good. But point is, we'll see the effect of our transaction here. So we're going to go into the inventory account. And there's our transaction for Adam. And if I select that item, here's it should take us to that invoice. And if I see the invoice, note that I don't see that $100 on the invoice anywhere. But the item is driving the cost. So that's the key point we wanted to point out there. If I go back then, and if I go to the income statement and look at the other side of the income statement, which needs to be in February, so that looks good. It's going to be in the cost of goods sold. So if we go into the cost of goods sold, it should refresh itself. The report should refresh as we go into and drill down on the cost of goods sold. And we scroll back down, and there's that $100 again here. So here's the $100 here. If I go back up, that represents the expense, the cost of us consuming the inventory in order to help us generate revenue. So what happens to our bottom line on the income statement? It's going to go up by the sales amount, not including the sales tax. And then it's going to go down, or net income is going to go down. The expense of cost of goods sold is going to go up, bringing net income down. The difference between the sales increase and the cost of goods sold increase will be the net effect on the net income of the invoice. So just note, there's a couple other features within the invoice. Obviously, you saw that you could email the invoice and send it out in different ways. So we could send it out basically electronically. And after the invoice, we receive payment. We've got the receive payment item on the bottom. That's what we would expect to happen in the future. We also have some navigation with regards to the invoice. If you go back to the dashboard, we'll take a look more at this when we go to the receive payment items. But now, of course, you'll note that we have that accounts receivable out there. We can then go to the invoices owed to you from the dashboard and consider the awaiting or pending invoices that are owed to us. And we can go through these items and say, hey, these are the invoices that are owed to us, and we can follow up with another invoice, sending it out again, or try to do our collection action, of course, on these invoices that are out there representing what is owed to us. Now, note the effect on the balance sheet as well. If I go back up to the balance sheet, the two accounts that are affected on the balance sheet is the accounts receivable, which we can also track by customer. So there's going to be other reports if you're dealing with accounts receivable. We'll also be taking a look at a later time, other subsidiary reports that deal with accounts receivable. Note, if I drill down on accounts receivable here, I'll get detailed by date when the accounts receivable took place. However, I want to know who owes us the money. Therefore, I'm going to have to look at it by basically customer, who owes us the money. We also have the inventory records. If we're going to be tracking inventory in Xero, then it's also going to have other reports that I want to know the items that we have, the golf balls, the 9-packs, the 3-pack, or whatever that we have, and the number that we have on file, and that should be tying out to this inventory report as well. So these two accounts need, in other words, subsidiary ledgers beyond just drilling down on these and getting basically the GL or the transaction detail by date. We need to know by customer for this item and by item or inventory item by this one.